RWA, the real world asset tokenization. So please let the people come up for the panel. So let me introduce them. Number one, the moderator, Khushbu Kular, venture partner, Lightning Ventures. Then Andy Ting, founder Hela Labs, Hao Yun Tan, CEO Chateau Protocol. And then Stephen Schwing, general partner WACMI Ventures, and Takashi Hayashida, okay, that is difficult to pronounce. Sorry if I pronounce it wrong. Managing partner, Taisu Ventures. Somebody changed here. I think everybody is here. So enjoy, guys. And I'm super interested in this topic because it's close to my heart because I'm originally a real estate developer. And I love tokenization of renewable energies and real estate assets. So please, let's go, no?
Thank you. Good morning, everyone, and thank you for joining us today at the Global Blockchain Congress. We have an amazing panel today, and I am thrilled to be moderating this session. Let's begin with a quick introduction. I am Khushbu Kular, the venture partner and head of portfolio success at Lightning Ventures. Lightning Ventures is a US-based VC firm, and we invest in Bitcoin native startups. So far, we have invested in 43 portfolio companies. In July this year, we also launched a brand new platform called Thunder Funder, which is a Reg CF platform where even non-accredited investors can also invest. So if you're building something groundbreaking in Bitcoin, AI, Lightning, or FOSS, you can reach out to me or our website, which is ltng.ventures. Okay, now let's hear from our panelists. Over to you, Andy.
Okay, I'm Andy. I'm from Hela Labs. I'm the founder of Hela Labs. We are based in Singapore. We built EVM-compatible layer 1. Our focus is mostly on games and DeFi, and we plan to use some of the AI bots that we developed to assist, the development of these two sector and getting the access to these bots through our chain as well.
Thank you, Andy. Let's move on to Hao.
Hi, my name is Hao Juin. I'm the founder CEO at Chateau. Chateau is a DeFi protocol, and we're bringing blue chip private assets on chain, primarily US-based private equities, pre-IPOs, and funds. Our approach is pretty unique. We're focused on non-US investors, and that lets us build composable DeFi native token models. We're solving two problems. We're solving the problem of access from investors into these private market assets that are traditionally very opaque, and then we're solving the problem of friction, onboarding friction. So issuers and sellers on the sell side don't need to have any prior knowledge of crypto or DeFi to issue their assets on Chateau. And we're chain agnostic. We'll be on most big EVM chains, Solana, and some Bitcoin L2s.
Hi, my name is Takashi. I'm originally from Japan. I'm a co-founder and managing partner at Taisu Ventures, focusing on early stage startup investment in all in Web3 space. We have currently a portfolio of 80 companies worldwide, all in Web3 space. Yeah, our long-term mission is to connect different ecosystems globally, chain agnostically and region agnostically. And happy to be here. Thank you.
Thank you, Takashi. Steve.
Hi, everyone. Stephen Chung from WACMI Ventures, general partner. We invest early stage infrastructure. We're recently expanding out into DeFi primitives, TON network, as well as different AI, RWA, DePIN protocols as well. Been in the space since 2015, seeing it totally transform. It's amazing to see every cycle, just the layers that get built, the things that don't work, more than the things that do work. So happy to be in this space. We're actively deploying our second fund right now. We'll be working on our third fund with a different name in the future.
Thank you. So we are here to dive deep into one of the most exciting topics, real-world assets tokenization. It's a topic that has been gaining traction as more industries begin to see the value in building tokenization around the assets like real estate, carbon credits, fine arts, and beyond. All right, let's dive into the discussion. I will begin with Andy. Could you paint us a picture of Hela Labs' vision for a connected world powered by blockchain?
So for Hela Labs, we developed the layer one based in Singapore, and then I think natively we are pretty much connected within the Southeast Asia. We got offices in a few other countries as well. So one of our motivation is that within Southeast Asia, we see that there is a great potential for blockchain and also cryptocurrency, and then and it's also a pretty fragmented kind of economy because each country has their own currency and stuff like that. So we are actually trying to connect all this economy via things on chain, and then not just through tokens. It's also through like being able to tokenize certain assets, so that between the countries, people can have transparency over the ownership, things like title deeds and stuff like that. Yeah.
Can you elaborate more on how this vision aligns with the tokenization of real-world assets?
Yeah. So, for example, if let's say there's let's say someone from Singapore would like to own something in another country, or even take part in something like a factionalized ownership, investment in another country. So they could actually use blockchain to lock in, their share or their tokens of that particular investment, and then from there, whatever data relating to that investment can be actually be transparent on chain. Not just on property, and recently we also have some discussion on putting recording data related to carbon offsets on chain, and then so I think it's actually a pretty good use case, because for this, right, it can help to avoid double counting of carbon offsets, so that all the data that's put on chain, it can be immutable and also transparent. Yeah.
Thank you, Andy. Let's bring How into the conversation. How, in simple terms, what's Shutters all about, and in a broader landscape of tokenizing real-world assets?
Thanks. Chateau is answering the question, why can't we trade everything on chain, really? And I think it's a matter of user experience and friction. So we partnered with a medium-sized Wall Street fund to bring their entire portfolio of private equities and their private credit fund on chain. So we have assets like OpenAI, SpaceX, Anduril, Anthropic, Circle. We just got a tranche of Circle last week. And we want to start closing deals, right? Putting these deals on chain. I also have a question for a lot of the funds here. Like, if you're running a venture firm or a syndicate, why aren't you reaching your LPs on chain? Why isn't your fund on chain, right? And the answer to that is twofold, right? There's regulation. If you're based in the US, it's nigh impossible. And then the second is UX. So Chateau's solving that by solving a lot of the UX issues. We're not serving US clients at the moment. For the buy side, we're not serving US investors for very obvious reasons. But once we leave out the US, we can actually solve a lot of the UX problems. So like we have a tokenized SPV framework that lets you sign one contract and tokenize a part of your cap table or your entire cap table. It lets us very flexibly wrap assets like private equities, like funds, it can be real estate, and can be this hotel, and bring it on chain in an ERC20, very fungible, very tradable manner. I'm very excited. We're about to go into private beta over the next few weeks, and we have a lot of very high quality supply coming online.
Okay, thank you. Takashi, you wear an investor hat. So how does the tokenization of real-world assets fit into Taisu's ventures? And what excites you about this space?
Being a venture capital focusing on the financial return in the Web3 space, it's so important for us to try to find a business model in blockchain and Web3 space that works within 3 to 5 years. So we have basically 4 different verticals that includes infrastructure, DeFi, gaming, and the user platform. But tokenization is definitely the number one focus that we have within our strategy, because we believe that there are certain area within the tokenization business model that includes the tokenization of different funds, including hedge fund and private credit fund, that makes sense, where that gives more liquidity to the investors, as well as a new channel to raise fund, which is already an innovation that could have haven't happened without a tokenomics, a token model. So this is definitely one of the sector we believe that would be a great innovation, not only just a great innovation, but a revenue generating kind of business model, which we care so much as a financial investor in this space.
Okay. Thank you, Takashi. Stephen, you are also an investor, so I have the same question for you. What's your grand strategy, and what are your thoughts on this?
So the RWA space is fascinating. There's a lot of liquidity that's being locked into traditional assets, and RWA has the possibility to open that up. Our current thoughts on it is that it's very difficult. So playing devil's advocate, it's like, what could go wrong? RWAs into blockchain. Blockchains are decentralized, transparent. You can see what's going on, but there's still a layer of trust that has to go from the RWA asset to the tokenization of that asset, and depending on what framework you're at, or what government regulations you are at, how those assets are structured. There's so many pieces to it that still need more development, in my opinion. So we're super bullish on RWA long term, but we're still trying to get the infrastructure and the frameworks built so that you can have these moving from more opaque assets to transparent assets on chain. Overall, I think our investment thesis right now is to kind of figure out where that goes. One of the biggest problems that we are running into as an investment firm, as a VC firm in the RWA space specifically, is the lack of knowledge. So you're talking about tokenization of mining assets in forest mining assets. It's like, I don't know anything about that. I don't know how that asset works besides what the person's telling me. And then you put that all on chain, it just gets even more complicated from there. So part of it, I think, it will take time. Definitely worth it to do. I applaud all the builders that are building in this space, but it's definitely a unique combination of traditional finance with on-chain finance, or blockchain finance. So excited to see where we're going from here, but I do see a lot of friction points that need to be solved before we really get to on-chain assets being distributed across the world, being secure, but also the underlying assets being able to securely use that and to bridge that gap between the off-chain and on-chain.
Thank you, Stephen. I got your investment thesis, but I have a follow-up question. As an investor, what are the key factors or due diligence that you do before deciding to invest in a startup in RWA tokenization space?
Well, due diligence, we're early stage investors, so we always look at seed or pre-seed projects. So at that point, it's very hard to tell where the final product will be or how well it will do. So we look at a lot of the founders, the background, what they've done in the past, the team around them as well. Especially RWA, it's complicated because you don't need just blockchain, programming skills. You also need people that are knowledgeable in the regulatory space of the asset that they're trying to bring on chain. Carbon credits, I have no idea how carbon credit works. And it's, sometimes people say it's rife with fraud. Real estate, I understand to a certain extent, but primarily only US real estate. So if you're doing real estate in Malaysia or other areas, like, how does that work? How do I understand that? If we invest, we're looking at the founders primarily, their background, their history, what they've done, and the resiliency. I think somebody mentioned that last panel. Very important, because a lot of times when you're starting off a project, your plan is to get to this point, but you don't necessarily get there. It's a question of how do you work around if you've got a block in your path. Maybe you pivot, maybe you do something else. Your plan is to start as RWA, but maybe you become DPIN, and that's fine with me. That's great. Like, if you're a founder that has that resiliency to pivot when you need to pivot, that's valuable in my opinion.
Thank you. Takashi, same question for you. What are the key factors that you look into?
Maybe not just probably limited to tokenization space, but whenever we make a decision to invest on doing our IC, we would definitely focus on its scalability, because there are so many great inventions, great business models that could work, that could still generate revenue. But we have our own objective of aiming at least 5x in 5 years. So we need to look at the scalability of that innovation, whether the business model is focusing on the real estate or a private credit fund or hedge fund. What kind of market, what kind of demand is there in the space that you're looking to build a business model on? And it could be wrong, and you can probably pivot. But if you don't have enough conviction of the size of the wallet whenever you decide to build a business model on, I think you may not go well, despite your level of innovation or any technology that you can build upon it.
Okay, thank you. Let's talk about institutional grade assets. How do you see the demand for tokenized assets evolving among institutional investors?
I actually think part of the appeal of DeFi is that these assets don't necessarily need to be sold to institutional investors. And then, based on my experience, working with different alternative funds, when you're an issuer or an originator, you don't really care if you're selling to an institution or a retail investor. Money talks. Money is money. It doesn't matter if it's coming from an individual or a fund, right? The check sizes might vary, but then the beauty of DeFi is, like, these tokens are fractional. And you can sell $10 to some investor in Singapore, or so I think what DeFi enables is really fractional access, and people tend to focus on institutional investors. But if you're thinking that way, that means you're trapped in the accredited investor. You're thinking U.S. Regulated asset offerings. In which case, why use DeFi? Because the regulations in the US are extremely unfavorable to what DeFi actually enables, which is like instant liquidity, fractional access, composability on top of that. And that's what we're focused on. I think it's not to say that DeFi native real world assets cannot have an institutional audience. I think the rigor of due diligence and the quality of assets needs to be there, but I think the audience is much wider than just a fund or an institution.
Okay, so I have a follow-up question. Then, how does Shatu actually ensure compliance in different jurisdictions while offering a DeFi solution?
I think we're spoiled because we can pick and choose. I went to school in New York, right? I went to probably the best business school in America, Stern, and I have a network on Wall Street, and just I understand how U.S. security regulations work, but when I'm building Chateau, I don't have to set up in the U.S., right? There's a lot of very forward-thinking jurisdictions around the world, right? We're thinking about ADGM in Abu Dhabi. They have an amazing regulatory regime where they recognize tokenized real-world assets. There's Bermuda. I spent a few months in Bermuda last year. The VARA regime there is great. Hong Kong's doing something. Singapore, obviously, but I hear it's very hard to get. And there are more and more jurisdictions, Seychelles, Marshall Islands, that are coming up with regulatory regimes that recognize tokens as equivalent to equity. And back to your question, Takashi, how do you make sure it's secure? How do you make sure the underlying is secure? If Chateau issues assets out of ADGM in Abu Dhabi, we have regulatory oversight, right? In Bermuda, it's the same thing. You have insurance, there's regulatory oversight. You make sure that the tokens actually represent the asset that they claim to represent, right? And that's great. And we're picking and choosing the jurisdictions where it makes sense, and that's been our approach. Push the boundaries a bit, go to where the regulators want to do business instead of I'm praying that Gary Gensler and Elizabeth Warren suddenly change their minds.
Okay, thank you. Andy, the question is for you now. So given that tokenization is in very early stages, how do you convince traditional companies like real estate to adopt these solutions? So what's your secret sauce of winning them?
So I think convincing like a traditional company to go into tokenization on blockchain, right? For us, right, we rely quite a bit on our network because as a team, we've been on the like a TradeFi space, and even fintech space for more than 10 years. So we have a lot of network into banks, exchanges for quite a while. So because of the track record, it's easier for us to convince them that we are doing something real. In terms of real estate in particular, I think a lot of real estate company, they wouldn't mind tokenization if it means helping them to sell their stuff faster, and getting access to another pool of clients that they didn't get access to. So I think it's really largely driven by commercial reasons, especially when it comes to real estate. And then in terms of, let's say, other sectors, is really sitting with them and then understanding how we can bring that cost down and bring their profit up. Yeah.
Okay. How I would like to know, what are the barriers or challenges that you see in adopting tokenization, and how does Chateau address these challenges or barriers?
It's a two-sided market, right? There's no market if there's no buyers, and you need buyers and sellers. So on the sell side, the main barriers I see is just onboarding friction, and different firms, different asset originators have different preferences. They might be in New York, they might be in London, and then they want to issue something that's compliant with local law, right? If you're in the US, it's a non-starter. You might as well just put it away, come back after the elections. If you're in Abu Dhabi, you can do it today. So there's a lot of friction, uncertainty, and challenges in terms of regulation. There's also technical challenges, right? Like people need to figure out what chain am I going on? What's the token model? Is it ERC20, ERC3643? There's 10,000 different standards, the Solana. So there's a lot of complexity there, and a lot of the work we do at Chateau is really simplifying things down. We're here's the model that we think is best for your asset, and here's where you should issue it out of, right? And for the buy side, I think it's a matter of discovery and education. It's what are these assets? Like real estate, there are many projects in Dubai. A friend of mine, Parcel X, they tokenize condos in Dubai, right? Why that building? What's the cap rate? Is there a risk of flooding? All those kinds of questions. And then there are fancier projects like tokenized Pokemon cards, tokenized Rolex watches. That's very interesting to me. Chateau is focused on like private equities. We want to do like OpenAI, Circle, because it scales, right? And everybody knows about SpaceX. Everybody knows about OpenAI, and I think it's like an attractive asset class. But on the buy side, it's about discovery, and I think there's a lot of work that will happen over the next 1 to 2 years with account abstraction. Really, I think the DeFi onboarding experience right now is like you have to go to Coinbase, you have to go to Binance, buy USDC, and then, oh, you're on DeFi, right? We need to reach a point where it's as easy to trade on chain as it is on Robinhood or interactive brokers, right? So fiat ramps, things that plug straight into your bank account, you get a debit card with it, and then you just trade these assets. And I think that's going to happen in the next 1 to 2 years based on what I'm seeing. So, two-sided solution. You need to solve the sell side, and then you need to solve the buy side.
So a follow-up question. So what kind of a dream team do we need to make the adoption of RWA tokenization a smashing success? How should VCs, startups, and regulators should come together to make this happen?
I think regulators in the UAE and in Bermuda and potentially Singapore are already doing a pretty good job. They could lower the cost of applying for these licenses because it's usually a 6-figure investment. In terms of VC funds, I actually think VC funds have the potential to be some of the earliest adopters for RWA. So we're in talks with a few funds, and there's stuff called FHE, fully homeomorphic encryption, like private funds like you're already invested in Web3 and crypto. So why not just bring your whole fund on chain and give your investors LP tokens instead of a paper contract, and make them send you stable coins instead of make them wire you and sign a PDF, right? Like VCs actually can be the early adopters for tokenized RWAs. Like tokenizing funds is pretty trivial. You can talk to us. We can get a deal done this week.
Okay, so since you mentioned like VCs should be the early adopters, what are your thoughts on this?
We are open to anything since we have I think around 7 portfolio companies within the tokenization space. We are talking to them regularly how we could ourselves adopt those technologies and together with the regulators, and which is I think the key factor here. And on every project launched by our startup, our portfolio companies, we are trying to take part in the discussion and negotiation with the regulators in each of the country. And oftentimes, there are some requirement that where we as an investor could help by bringing some of the other networks or technologies built in some other areas to satisfy the regulators' need to probably, for example, bringing a new, different node operator within the network where those tokenized assets would be circulated on, so that to give a certain level of security and comfort in the eyes of the regulators. So that's the reason why we believe that a connection with the different ecosystem globally on a global scale is so much important in the Web3 space, because there's obviously limits of what one startup or one founder can reach out in terms of resources whenever you have to deal with regulators in a country like Singapore or Japan or Middle East. So great startups who is in tokenization space in Singapore and Middle East have a great connection with the relationship with its regulators, whether it's in Singapore or Middle East, including Dubai. Our portfolio companies are doing great in those 2 spaces. So I think this is one of the essential elements that we need to bring in when we think of a successful business model around the tokenization.
Fascinating stuff, Takashi. Stephen, do you want to add something as an investor here?
Sure. So I do see some tokenized funds out there, especially DAOs that use a model that's, the DAO will invest into a project, and then the token holders will get the benefits from it. So they're out there. Why isn't it more used? I mean, so one of the issues is that even with DAOs, where you've got multiple shareholders, the token holders, when you enter into a private round into a project, you've got contracts, they've got restrictions, they might not be able to transfer tokens at a certain time. The sell side, when you exit your investment, gets complicated. So that's the piece that's really, if there was some sort of standardization, it would make it a lot easier. But each individual deal is kind of different. And it goes the same with RWA assets. So it's like, how do you get these assets so that they're composable? And when you're trading this token, somebody that buys the token knows what they're actually buying to some extent. And it's a very difficult problem to solve. I think there's definitely people like you guys that are solving it. And I think that's going to be a key unlock. The other aspect of this that is kind of a pushback, a devil's advocate, is that real-world assets, a lot of times it's about the speculation on the asset itself or the yield that you get from that asset. In the crypto space, if they're crypto-native people that are buying on DeFi, they also have access to, for example, USDE from Athena, which is earning 8 to 10% on a stablecoin. It's like, how do you make your RWA attractive to somebody that can earn 10% on their stablecoin? It's like, where's your value add on top of that? There's like a risk-free rate, even in U.S. Treasuries, that stock companies or publicly listed companies have to beat in order for it to be an attractive investment to most people or institutions. So it's in the DeFi space, especially, it gets super degen and it can go up to like 20, 30% depending on where you're putting your assets. It's a very difficult thing. And, and one of the worst things is like the meme coins. It's like people would rather just buy a meme coin that has nothing to it than try to figure out where this RWA, where this real estate token is, if it's valuable, if it's going to continue to be valuable, if it's going to continue to generate revenue. So it's like the educational aspect of this is barriers, it's friction, it's things that we need to overcome. I think we're well on our way, but still a long path ahead of us. I'm excited for it, though.
Interesting. Since we're running short of time, so I would keep it quick. Any closing remarks or thoughts you want to add, Andy?
I think the closing remark I have is that regards to tokenization of real asset, I think one thing that is probably still lacking in this space is the insurance related to especially the blockchain and the crypto side of things. So if going forward, we are working on something like, on that. If going forward, we could actually help to bridge that gap, right? Providing that on-chain kind of insurance, I think it will help a lot in the confidence of the general public in using going, to buy assets on-chain.
How?
I think we're going to see a lot of developments over the next couple of months, and I'm very excited about it.
So I think during the previous panel, Jacob, who's a great guy, a friend of mine, Superscript, also talked about the chain in AI business. But also on the tokenization part, you have different players within the tokenization chain, starting from the technical perspective, where you tokenize your assets and also structure it in the right way and make it tradable on the exchange. Also, distribution part of it, where you actually raise fund out of those tokenized asset. So I think it's so important to look at where you would want to be in the chain to make it successful as a business, so that you can have a scalable and sustainable business. Thank you.
Stephen?
I just want to mention one other thing. Andy, you mentioned insurance. We just invested in a project called Risk Layer. They're building economic risk modeling for crypto assets, and I think it will be a key unlock for the future of DeFi, especially RWAs. There needs to be some sort of rating, economic rating agency or models for crypto assets in order for it to eventually become put into structured products. And Risk Layer is doing this modeling. They're also creating like a chain link type model that allows nodes to real-time update the risk, economic risk of assets. So, for example, Curve, there's so much Curve on lending platforms and so much money being lent out using that as collateral. The asset itself is not very it's not very good. It's not very. It's got a high risk rating, even though it's relatively, the tokenomics is good. So I think once we have this layer where we have some sort of a rating agency for crypto assets, we can really do some cool stuff on top of that. And I'm seeing it develop layer by layer in the space, and awesome place to be. Really, really fascinating. And I really appreciate the founders for pushing the space forward, because without the founders and these people, trying to make this work, you don't get these things built.
Yeah. Thank you, panelists. So that's our time. I hope you all enjoyed our panel. Thank you, everyone.
Thank you.